we've done a lot of research around, in Australia specifically, the wealth transfer, this demographic cliff. It sounds like a sudden event, but it's a tail event that's going to run and run and run. Obviously, as wealth is transferred, we have different demographics, we have different age groups of people who now have capital, for example. We have different mindsets, attitudes towards different types of investing, engaging with third parties, working with advisors, utilising technology. So where do you think some of the key battlegrounds are likely to be? If we think about funds management to 2030, the funds management over that next 5-year period, what race should these guys be looking to run, and how can they, you touched on some of the opportunities, but where do you think is best?
Look, I think in terms of, there are quite a number of very successful boutique managers out there that are largely owned by one or two founders. I think they're getting to the point where they're probably looking at how do we get out? What's our succession planning? So again, opportunities arise for others that looking to build on their existing capabilities. You go down the wealth chain, right? Businesses within the value chain, financial advice groups. There's a lot of small financial advice groups out there, quite often started up by a single founder looking to exit the business as they move towards retirement.
The cost of, just jumping in onto that, I mean, our research shows that there are a significant number of advisors running their own AFSLs, which has merits in terms of independence, but systemic risks in other areas, not through malpractice, but just on the basis that it's a difficult business to run single-handedly. Where do you think distribution, so you talked about before as well, a shrinking advisor pool, but if we think about the pot, so as opposed to the opportunities from a industry perspective, mergers, more efficiencies, in terms of chasing that pot of gold, as it were, what should managers be looking at if we're looking at whether it's high net worth, family offices, retail money, digital fund flows and things like that? Where do you think the prize is biggest or sweetest, as it were?
One area that comes to mind is pension, the decumulation phase of the superannuation or the retirement system. So we've got roughly, I think, 75% of the $4 trillion in superannuation still sits in an accumulation phase. But something like $80 billion is transitioning to decumulation each year. Over the next 20 years, we're going to see roughly 50% of that pool move into decumulation. And while we've been very good as an industry building up an accumulation framework, set and forget largely, get your asset allocation right and set it and take a long-term view. Retirement's different. The decumulation phase is very different, and I don't think we've nailed that one yet.
And if you marry that against the demographic changes, people living longer, our research, we look at older Australians who, they live a more active life for longer, and they don't necessarily retire and sit around. So I think the product set of the industry needs to match that, and it's not necessarily straight into lock-in full conservative mode. Assets have to continue in that decumulation phase to grow. Obviously, exposure to volatility and those market risks in the process. But I think if you're taking a view that demographics, the average age is now 85 or something in Australia, but then also the decumulation phase happening sooner for some people, where they're making lifestyle changes when they're in their late 50s, for example, so they're not running straight to the end of the retirement.